Kevin Brierton here, certified mortgage planning specialist with Neo Home Loans, bringing to you a strategy that's going to be able to help more veterans get into homes. So for a long time, VA loans sometimes are shoved to the side because they may not, they have misconceptions in the marketplace that they may not close or having issues with appraisals. A lot of that is not correct, but one of the cool things with VA loans is you're allowed to have more seller concessions. And I want to talk about what seller concessions are and how you can use them for your strategic advantage to get your offers accepted and or get into the home and close on the home you love. All right, so what is a seller concession? So what these are seller credits. So the buyer goes in and makes an offer on a house, and instead of asking for a price reduction, they ask for seller credits. Now, this can be done at the time of offer, right up front, or it can be done during the time of negotiating on home inspection items. Seller credits are a very useful tool, and here's a couple deal-saving reasons why they're very, very important to understand the nuances and the strategy here. The strategy, what we're looking at here is how much can you use? So most places are going to tell you that you can use 4%. So on a VA loan, seller can pay up to 4% sales concessions, which includes buyer's funding fee, prepaid taxes and insurance, gifts such as television and microwave, and I'll show you where that's in the guidelines, so it is in there. And then permanent interest rate buy downs or temporary buy downs, so to buy down the interest rate with what's called points. You know what's great about this deal saving idea? You could pay off credit card debts and judgments like I just mentioned, but I'm going to give you a couple real life scenarios here of how you can save the day. 1 week before closing, the borrower mentions they have new monthly childcare costs as the spouse is returned to the workforce in the last they've been off for 3 years and they've returned to the workforce. If they have childcare, that can really mess up what's called the residual income and cause a deal not to close. So a couple ideas here is you can actually pay off other debt to lower the debt to income ratio to get it back in line. Another example is you didn't count a $300 or the lender didn't count a $300 car payment and that was being paid off in 5 months. So sometimes what happens is lenders won't hit you for or calculate a payment that's paid off with 10 months or less. But what happens is sometimes the underwriters can say, hey, that is actually a significant debt, and they won't let you disregard that debt. So the borrower would no longer qualify, which could be a problem. So then in this case, what you can do is you can get the seller to provide credits to pay off the car and negotiate that and qualify with paying off the debt. So that can save that deal. The other thing is if the borrower's debt to income ratios are tight and the residual income is really tight, there's no room for any little mishaps. They go out and buy a new big screen TV with their credit card they just opened, and now the payment with that ends up ruining the debt to income ratio qualification. And debt to income ratio, or DTI, we basically look at the total debts and the total income, and it has to meet certain guidelines. VA is more flexible than other guidelines, but keep in mind, it can still be a big problem. I actually had this happen where somebody went out and bought a new Jeep right before closing, and it caused a major issue. So in this case, let's say they go out and buy new furniture or buy a big screen TV. Now the deal's not working. Well, you can negotiate with the seller and the realtors and the lender to say, okay, let's figure something out here to get some credits to be able to pay off that debt. That is allowed, and it does not have to be included in the 4% equation, which is awesome. Number two, deal saver right number two, is understanding the 4% seller concessions and how it's calculated. You know, this concession limit is truly limited to the seller only. Okay, so it's limited to the seller only. This concession does not limit, this limit does not include closing costs. So this is a little confusing, but if we look at the VA handbook, chapter 8, other parties' fees and charges for the veteran borrower, this section has changed. So keep in mind these guidelines update often. This was changed back in 2010. So you always want to update guidelines, but this is the guideline as of now The seller, lender, and other parties may pay fees and charges, including discount points on the behalf of the borrower. But the VA regulations limit charges made against or paid by the borrower. They do not limit the payment of fees or charges paid by others. So they'll break this down for you. They also do limit excessive seller concessions are prohibited when they're abused, and I'll show you an example. So this is the guidelines here, and if we look over it right here, it does show you the gifts and television are allowed, but it specifically says seller concessions include but are not limited to the following. And the seller concessions do not include payment of borrower's closing costs. Okay, so they do not include payments of borrower's closing costs, or buyer's closing costs, or the payment of points as appropriate to the market. Okay, this is where you can't have excessive fees. So for example, right off of the VA handbook, if the market dictates an interest rate of 7.5%, let's say, with 2 points, the seller's payment of 2 points would not be a seller concession. Now, if the seller paid 5 points and the market was 2 points, then 3 points would be considered as a seller concession. So as long as you have a lender that's not ripping you off, frankly, you shouldn't have a problem here. And so think about this. So when calculating the 4% limitation, do not count the amount paid by on behalf of the veteran by the lender, real estate agent, or the seller towards closing costs. Okay, because the closing costs they're figuring are customary and they're allowed to be paid, then you could pay the 4% on top of that. So let's take an example: $200,000 sales price and value. Sales price and value, that could be different depending on what market you're in, but sales price and value. Seller concession allows $8,000. Guidelines state 4% seller concessions the max. Okay, that'd be $8,000. So in this example, let's say closing costs are paid by the seller. Closing costs are $4,000. Remember, we just read that customary closing costs do not have to be included in the 4%. So is that a concession? No. Prepaid items like tax and insurance paid by the lender in this case, is that a concession? No, it's not. Judgment or payoff, this is a concession that can be allowed to be paid by the seller as a concession. So that is a concession. And then home inspection paid by the agent is not a concession, so that does not need to be included in the 4%. So the total amount paid for the veteran is $11,400. Total amount paid by the veteran by the seller, or paid for by the seller, is a $9,500. And then the actual total consideration for the seller concessions is $5,500. So what you're seeing here is you've got to have some strategy here. And I think the importance of this kind of exercise that we just went through is understanding that there's not a one size fits all for these loans, and breaking down what is possible and putting a deal together. And that's a lot of the value. I actually had somebody come to me recently, a good friend of mine, and he asked me, what is your value as a lending partner for both your realtors and the families we serve? And I broke it down that we're here to be there long-term, watch over the mortgage over the next 30 years. We don't want to just be here for somebody today and then gone tomorrow. We really want to be here as a strategic partner long-term. That all starts with making sure we're helping with the strategy up front, getting into the house as well. So strategies like this are very important on how to put a deal together. If you want to learn more, please go ahead and reach out to us, call us, text us, email us. We're here to help. And thank you so much for watching. Have an awesome day. And if you like this, please like, share, or comment below, and we will talk to you soon. I'll jump in the comments too. Have a great day. Bye.